Hi again, my name is Tuche and I'm Marketing Manager for the Amazon Selling Partner App Store. Thank you for joining our webinar today. As Selling Partner App Store, we are continuing our webinar series with our software partner Payoneer today. And as you may know, the App Store is a one-stop shop for Amazon selling partners to discover more than 2,000 trusted apps to help you grow and manage your business. Today, we have Roland Berry, who runs partnerships for Payoneer, a US-based global payments and commerce-enabling platform powering growth for millions of small and medium-sized digital business around the globe. One of the original fintechs, started in 2005, Payoneer has been a long-time partner of Amazon, and we are pleased to have Roland here today to share Payoneer's insights into how Amazon sellers like you can overcome barriers to growth by solving cash flow constraints and making your own payments to suppliers easier. Without further ado, now I give the floor to Roland.
Thank you so much, and it's a real pleasure to be here today talking to all of you. As mentioned, my name's Roland Berry. Don't let my accent fool you. I'm based in California, and I look after partnerships in North America for Payoneer. For those of you that are perhaps not so familiar with Payoneer, we're a global financial platform and commerce enablement service that allows a lot of sellers from all around the world to connect with marketplaces and other e-commerce sites globally. We've been around since 2005. We have a really global reach, and we're helping a lot of sellers access financial services wherever they may be and able to do commerce on these platforms. What I'm interested in talking to you about today is we've been working within the Amazon ecosystem for a very long time. We've got a lot of expertise that we're really interested in sharing with you today. The idea is not for me to stand here and tell you how amazing Payoneer is, but to really just show some anecdotes from our experience working with you guys, some of the stories that we've seen work, some of the areas that we've actually been supporting in this success, and then to spend a bit of time with a couple of colleagues at the end to answer some of the questions that may come in from you. So if I move slightly into the deck for today, where I'd like to start is actually let's talk about 2022. I'd like to just talk about a couple of the areas in which we've seen some of you guys and other sellers think about growth. How are they thinking about targeting exponential growth specifically? And then sort of delving into some of the challenges, which I'm sure will be no surprise to you guys, and actually look at the different strategies and tactics that some of the sellers are using to mitigate these. Two of the areas that I want to go deep dive into are looking around cash flow management, look at financing options, and then looking at how you're able to leverage that money to pay for suppliers and services. All of this is with the mindset of a kind of global ecosystem and economy and supply chain, but it'd be naive of me to paint a very rosy picture without making some acknowledgement to the kind of macro economy and situation we're in today. So I will try and relate to some real life stories and some true insights that we've seen. And then I'll just spend a little bit of time at the end touching upon how Payoneer and some of our specific services have been leveraged before kind of moving into the Q&A session. So for the sake of me loving my own voice, I'll do the first bit and then would love you guys to contribute to the second bit. Please feel free to submit questions through the chat function. We'll be able to pick those up and answer those at the end of the panel. So look, let's start at the very beginning. And I know people on the call today, some of the sellers will be of all shapes and sizes in all categories and all different states of maturity. But I think if we take our minds back to the start of the year, and when a lot of us were looking at 2022, we were doing a lot of customer surveys. We were out there in the field building relationships with our sellers and taking a pulse check on where everyone was focusing on investing for the year ahead. Now, a lot of this is, again, no massive surprise to you guys, but there were some really sort of fundamental trends that came to mind. A lot of this is corroborated by kind of industry research and reports. And actually, I'd be fascinated to see where we are today if we were to take this poll again. But at the start of the year, some of the kind of market research was leading to three main buckets. No surprise, everyone was thinking about getting share of the customer's eye. How do I get my products, my advertisements into the front of the right customers at the right time? And a lot of you were really focusing on heavy investment in these advertising channels. I think what's interesting as we now sort of 6 months into the year is actually now thinking about ROI on which channel is actually driving meaningful results for your business. And we'll talk about this a little bit later. It's great sort of getting the capture of the eye, but we also want to think about how can we expand into other geographies, other segments, other platforms and other marketplaces. A lot of you are seeing success perhaps just in the Amazon US, but what about France? What about Germany? What about a global kind of approach? And this, again, really will not kind of surprise anyone here, is the real focus on investment in inventory. This has to be one of the biggest kind of like pain points and one of the biggest opportunities to really achieving exponential growth. And whether that's extending current product lines or whether that's thinking about entirely new segments altogether, this is really at the forefront of a lot of the conversations that we've been helping our customers and our sellers face today. And I think some of the interesting stories, and I'll give you a couple of examples later on, where you're able to kind of leverage consumer behavior, trends, and even challenges in the market to really target something very specific. Obviously, a country dear to my heart back home in England right now, I would imagine if you're selling air conditioning units, you're doing very good business, but you need to be able to respond very quickly to these market trends. Underpinning all of this is kind of some really fundamental challenges. And I'm not telling you anything new here, but I do think it's important to set the context for the rest of today's webinar. So if we start at the beginning with the kind of fundamentals of any good business, all of you are probably up late at night worrying about your cash flow. And yes, there's a whole host of different ways of thinking about this. There's a whole host of different strategies. Some of you on this call today probably have very large businesses with very sophisticated finance functions, potentially. Others may be very small and trying to juggle the job of finance director with sales director, with marketing director, all whilst looking after kids at home. So really, forgive me from stating the obvious, but I do think it's important to say some of the challenges here in scaling your business are where the cash flow crunch happens. What I'm talking about here is, even if you are the most profitable business out there, that does not mean that you have rolling cash on hand. What this means is that you're unable to pay your suppliers. You may well be unable to think about the capital outflows from your business. Is that your payroll? Is it the financing of loans? Is it thinking about shipping and logistics? All of the really sexy stuff takes money. And just because you're selling today doesn't mean that you can pay for that right now. And the cost of getting it wrong is pretty high. The algorithms out there are not going to do you any favors if you have a stock out. And then we all know how important the ranking is on these platforms. Having said that, I want to share a couple of the kind of rosy stories that we've seen where sellers have actually managed to nail this pretty well. Looking at things like forecasting and smart inventory management, which we'll talk about in a moment, really can move the needle when you think about increasing your sales. I think there's a really interesting kind of note here to look at around flexibility. During COVID, we saw a lot of sellers leveraging our infrastructure to be able to very quickly respond to a rapidly evolving and uncertain market. And we're starting to see this behavior again this year, as although there is some kind of headwinds within the e-commerce space, there is still some really interesting pockets of demand, certainly when you think about different segments, product categories, and geographies. Investing in growth is also the kind of paradox, the razor's edge that you have to walk, and constantly juggling the balance between product and inventory management versus warehouses and costs can be an opportunity to scale if you look at more innovative models. And just because you've got your cash flow under control doesn't mean that everything is easy. You still got to find ways to be able to pay for your suppliers and maintain good relationships with suppliers. And I'm pretty sure everyone in this room has some form of global exposure to some supply chain, particularly in emerging markets. These things can be very tricky for businesses as they scale, and the costs can rack up very significantly. So when you start thinking about things like how long it actually takes to move your money to someone in Asia, what is the likelihood of how much transparency you have on the risk and fraud that's associated with this, and what is the real cost of you sending money? It is not always as transparent and straightforward as some of your cash flow forecasting might make out to be. Again, we've seen quite a few sellers really cracking this challenge in the last sort of 6 months and before, and they're really now showing in these tight times how they're able to leverage cost savings from these smart supplier payment infrastructures. They're looking at how they streamline their operations as they start expanding into new markets perhaps quicker and faster than competitors in very aggressive segments. And all of this will improve your relationships with your suppliers, which at the end of the day is a fundamental part of you satisfying the customers out there and allowing you to keep on driving your sales machines for growth. So these are some very material things, and forgive me if I'm stating the obvious for some of you out there, but it is really important to think about this in the scheme of challenges to growth. Now, probably the more pertinent part is looking about what are you going to do about these problems? And there are some stories that we can share. There are some products that people are leveraging, and this is where I want to spend a bit of time today talking about. So for the sake of ease and my kind of simple mind, we look at things in two categories in a lot of the conversations we've had with our customers and sellers. And the conversations are always the same. How do I think about smart management for my cash flow to be able to ensure that I have a robust platform for growth? What I mean by that is not just the kind of accounting 101 around reviewing your balance sheet, thinking about your profit and loss, but also having a very robust ability to forecast ahead. And look, it's not easy. There's a lot of fundamentals out there that are changing, volatility in the market, uncertainty about the macroeconomic environment that we operate in. But there are some fundamentals that we've seen sellers really succeed with. And that's looking at what they have in hand today, what their cash and capital inflows are going to look like, and what their outflows are going to look like. Again, cash on hand today may only get you so far. Having some very smart thinking around your inflows, modeling out how much you've perhaps made in the last 3 months from Amazon or wherever, and taking a smart growth rate is all very well. But as soon as you start thinking about that, you're then having to look at more layers of complexity. And this is where we're seeing sellers become a bit more sophisticated. They're then able to strip out some of the fixed costs that are not necessary. They're perhaps able to leverage more innovative solutions, paying for things as a service, or perhaps instead of upfront, and really reassessing where they're investing their variable cost. And we're not telling you that we've seen all of these work, and there's a whole spectrum of success here. But when people are starting to really look at things like advertising spend, it's not a question of cutting the spend. It's being able to think about how do I look at this in association with my inventory management. If I run a campaign today, do I have the inventory to actually deliver against the demand on the back of the campaign's demand? What about if I make the lead time smaller? I'll be able to release some of the cash and capital that's tied up in my inventory. There's a whole way of thinking about this. Secondly, I'd say that we've seen a lot of sellers recently start pivoting to perhaps products that have more faster sales cycles. Again, thinking about keeping capital less locked up in inventory, being able to think about the cash conversion cycle so that they have money on hand to invest quickly. A lot of this has become very successful where it helps speed up turnover and inventory turnover, and it's allowed them actually to begin renegotiating their relationships with suppliers. This ability to negotiate terms, invest quickly in hot pockets of demand is having exponential impact and real long-lasting effect on GMV. I think the other point to make here is when you start thinking about capital cash flow management in a global context, you will start having to think about how you're paying for services and suppliers in other regions, and how is it that they like to be paid. But I'll come on to this in a minute. And so let's say you've got the most robust management system out there, your cash flows are looking very smooth. There is still the question of that cash crunch. This is what I was talking about between profitability and cash flow or cash on hand. And again, I'm sure a lot of you have gone through these pains today and probably scrapping around to find as much cash as possible to invest in your business, whether that's for marketing, for inventory, for other kind of fixed costs. And it always goes down the same line. You perhaps start out scraping money from friends, family, other bank accounts. That will only get you so far when you're trying to grow your business at a rapid pace. There's always the option of credit cards and lines of credit, and a question around how expensive is it really to use those sources of funds. And then there's a whole host of capital advance products out there in the market, whether they're traditional loan products from banks, whether they're more tailored solutions by fintechs and financial services platforms like ours. There's some really interesting options, and thinking about when is best to mobilize them has to be one of the biggest takeaways here. In our conversations with sellers today, it's really being able to prepare for uncertainty and to have a business that's very lean but very able to respond to consumer demands in the markets or categories that they want to drive growth in. So I think, and forgive me for being a cynic, I can tell you about how amazing all of this all day is. But I think at this point, it's worthwhile trying to give you a little bit of insight from what we're seeing in our ecosystem. So this is data that we've been able to pull, completely proprietary, around businesses that are taking these capital advance products. And we'll go a little deeper into what I mean about this. But again, this is a financing product that we're talking to here. And we're seeing that sellers on average that are taking these products in our ecosystem are seeing on around 42% month-on-month increase in sales. This is a really meaningful number. And look, it doesn't all happen in the first month with the first loan. I'll be very open with you. But there is also a very strong correlation between the repeated use of capital and an incremental increase. And that's what we've tried to show you here. For us, we actually see that businesses that start using these products have a very high repeat rate. So this means you perhaps start off with one loan, you get comfortable with how the product works, you start building a relationship, and you start seeing impact on your sales today. And then you start looking at taking perhaps larger loans, or you know that you have money on reserve to be able to move to a new market. These injections we see from the sellers that we're working with today are very typically deployed for inventory spend, or even just the day-to-day business needs. I'll give you a case study later on of a seller that we're very fond of actually in the US that has been using this kind of for some fun investments of late. But I think if we just move on, I'll come to that later on. And the second point that goes hand in hand with this is not only is it about access to the capital that can be loaned out to you or required from other sources. Once you have the money in your business and you have very strong sort of cash flow management practices in-house, how are you actually paying with that money? What are you actually doing with that? And this is where we've probably seen a really interesting sort of shift in the conversations that we're having. And that's thinking about global solutions. So again, a lot of the US market, and I think if you want to go read some market research, I'm happy to share, but I would say most or 2/3 of the people in this room today have global supply chains. This means that you're paying for goods, services, and everything else from providers in different markets. And that creates a really interesting dynamic because these are businesses that have perhaps different access to financial services. They're using different currencies, and they're operating very different business models to what you guys are doing out here. So this creates a kind of interesting dynamic where you have to think about how they actually want to be paid. How long will it take for them to be paid, and what's it going to cost you? There then becomes a question of who do you use to pay these providers? And how do you ensure that there's transparency and speed and perhaps the right kind of customer support for them? It's very different sending money from your bank account in the US that doesn't have a single employee in the region in Shenzhen, for example. And these are real challenges that we see from our customer base and a lot of the rest of the sellers out there. And then when you perhaps use specialist providers, this may be able to help. And this kind of comes in a couple of guises. One, for you, it's having certainty around when the money is being sent and where it goes, how much it costs, and also back to this important part of the whole thing, and that's really thinking about the time it takes to pay for suppliers. I'm sure some of you out there are very sophisticated at squeezing every last day out of your cash flow cycle, but you still want to know when the money makes it to your suppliers and do not want to run the risk of frustrating your relationship with them. So where does Payoneer fit into this? And I think this is kind of important here to take a step back and explain a little bit around Payoneer and what it is that we do and how we work with sellers out there. And then we can sort of dive into some of the products and services that we've seen successful in the market. Payoneer as a financial service platform sounds very grandiose. In reality, what are we doing for you guys? We're able to give you access to a number of different financial tools that have been created specifically for the e-commerce ecosystem. What that means, kind of taking away the sales pattern, is that we're giving you an account that allows you to receive money in a number of different currencies. We allow you to hold those funds whilst you sit here in the US, wherever it is that you're selling on whatever marketplace or platform. What I really want to focus on is not about how you get the money in, but what happens once the money's in the wallet or the account. And we'll come to kind of working capital in a moment, but I think it's really pertinent to talk about the complexity of managing the business. Last week, I had the pleasure to spend a bit of time with one of the sellers that we work with in the US on the West Coast. And he was explaining to me that how he's been rapidly growing his business. He's been expanding into new product categories. He's been expanding onto new marketplaces. He's living the dream that I'm talking about at the beginning of this presentation. What he then went on to mention is every time he's expanding, he has to set up a new bank account. And this becomes increasingly painful when he's operating in a number of different categories, a number of different countries. He's had to open up so many bank accounts that he's having to hire people to manage all of this. He's got Excel spreadsheets, he's got ERP systems all over the place, and he's spending so much time focused on this internal management that it's becoming a real problem. Payoneer was kind of aware of this a few years ago, and actually we've been able to create some tools that give you a single point of view across all of this complexity. It's really important to be able to reconcile and see the data from your different stores or your different platforms and have this single point of view to then understand where success is coming from. You need to know where it is that you want to invest in your business, where you want to mobilize this capital that we're talking about to be able to unlock growth. And so the money's in the account. You've got a good view on what's going on. You might well be accessing working capital from Payoneer. But I think for me, and that's because I'm sitting here as a kind of payments nerd, is understanding a little bit about how you do anything with that money. And this is kind of where Payoneer becomes really interesting. Payoneer has an ecosystem now of around 5 million SMBs. There's hundreds of thousands of suppliers in emerging markets and developed markets that are part of our ecosystem. And one of the kind of interesting points here is that you're able to pay other Payoneer account holders, Payoneer customers, almost for free and instantly. This means that you're able to move money very quickly around the world to other customers and pay suppliers that are already part of our ecosystem. What we've been working on recently is actually going one step further and fully integrating a lot of these suppliers and service providers directly into your Payoneer account, so you're able to manage some of the relationships and pay for some of these services. And it's not just about sending money to other users. I understand that although you may be spending a lot of money on inventory, there are other big kind of cost centers you think about. So Payoneer launched a card product a few years ago, and we use this with a lot of our sellers to drive particularly spend on online advertising. We always kind of have some very interesting competitive reward programs that we look at here. We have some very interesting relationships with advertisers. We increasingly see a lot of our customers are actually taking the capital that we're offering, so the working capital products, and mobilizing this on things like our card for increased advertising spend. Again, I think the important part here is to understand how do you have visibility into the success of that spend. It's not just about moving this money around. It's about making sure that the ROI is being tracked on the right channels. And then the last point is just thinking about a kind of global mentality. So Payoneer operates in dozens of countries around the world. We have a huge center in emerging markets, and we're there on the phone day to day with suppliers, with customers, trying to help sort out these problems in local language. This becomes really interesting when you want to start growing at scale and understanding a little bit more about the complexity of the e-commerce ecosystem. So look, high level over, sales patter over, I apologize now. But if we go into kind of a little bit more specifically around how we're helping, I think there's some kind of interesting tidbits to take away. I keep talking to you about capital advance. I keep saying working capital, and I think there's a kind of point to take here around what it is. What am I talking about? This is the ability for us as Payoneer to forward capital against your receivables. We do this up to $750,000 in some instances. These can be instant funds that are mobilized quickly directly into your account. This is a great way to be able to kind of respond quickly to something that's happening out there in the market. The way in which it works is that we put the money in there and we're not preordaining what you spend it on. If this month you need to spend something very quickly on some inventory purchase, then great, go ahead. If it's perhaps that you want to spend this on payroll or wages or shipping logistics, whatever it is, we're here to try and support you growing your business. And we recognize that you need to have the freedom to spend that money where you need it that month. And then the way in which the catch, and there's always a catch, I'm afraid, but clearly we don't do this for free. There is a way in which that we're taking a fixed fee for this product, but we're doing this each month. When you're paid out, we take a portion of this out. We can answer questions on this at the end and get into more details, but high level, this is what we're looking at. And look, perhaps enough of listening to me waffling on about Payoneer and the e-commerce ecosystem. I really wanted to talk to you about Evan. Evan's one of our customers that we work with at West End Toys. These guys are up in Virginia, and a really interesting company selling kind of a whole host of different products. I must admit, I wasn't so familiar about baby products and everything else until I spent a bit of time with the business. But it's been a really interesting story, and one that we see quite a lot across the Payoneer ecosystem. And that's kind of mobilizing this capital advance product that we're talking about, these financing products, to be able to expand their product catalog. So everyone was sort of seeing quite a lot of growth within one category. He really wanted to double down on it very quickly, and was able to kind of leverage the capital advance products to open up puzzle sales. Yes, I would never have kind of associated that before, but these guys were kind of driving really impactful numbers out of growing this vertical. And you'll see kind of over time how this has materialized in the last sort of 3 years or so. It wasn't just about the products. He was really explaining to me, and I'm sure this is kind of super straightforward to you guys, but he was talking to us about how he's leveraging this money to be able to invest in the infrastructure to support the inventory. So although he had great supply chain, he had great relationships with his suppliers, he actually was able to source new suppliers for the vertical. He was obviously dealing with products that were going to actually different locations. He needed much footage, and this was kind of where the capital was deployed. I think another one that was quite interesting that we were talking to in the US last month was, and I don't know how many of you are there thinking about your exit strategies, and maybe now is the wrong time, but we've certainly seen a lot of businesses deploy these capital advance products to actually rapidly grow their business for some form of meaningful exit. And again, I think it's a really interesting thing to think about, where whether you optimize your base for kind of small incremental growth, or whether you start really leveraging your revenues to be able to kind of expand much more exponentially. But these are some really interesting stories. We have dozens and so of these that we're happy to share, and all the team here are very accessible for. What I'd like to do, and I keep seeing the pings on my screen from the questions coming in, which is great, and we'd love to take kind of a chunk of time to look at this. As promised, this was an interactive session. But just before I finish my waffle and I hand it over to you, I just wanted to kind of say a small thank you for you guys taking the time here today, for registering and coming into the conversation. So what we will do is, I think we'll share it in the chat at the end of this, and obviously in the follow-up after the webinar. But just for the Amazon sellers today, we want to be able to offer you a 30% rebate on you guys taking something from us. We want to help you grow the business. We want to help you take control of the cash flow for growth, and we want to say thank you for it. So click on the link. It will be in the chat. It will come out to you. Me or one of the team will be there to talk to you and explain all of the questions. But I think that's me done spieling about Payoneer. And I think it would be great to kind of hand over to me and one of my colleagues here to answer some of the questions that you guys have been sending in.
Well, thank you so much, Roland, for this insightful presentation on how to address the growth and cash flow challenges. Really fruitful session. I'm looking at the questions. Feel free to keep them coming, and now we'll be answering them. Okay. So first one, can I request a capital advance whenever I need it?
Hi. Yeah, so just introduce myself. My name is Matt. I am with Payoneer's Working Capital. I have been for about a year now. And it's been great. I've been here since the beginning of our working capital solution launch, and to see it grow to what it has become, and to see our clientele of sellers really come in from all different parts of Amazon, not just US stores, but stores of all different regions, has been great. So yeah, thank you all for coming, and to answer that question, which is a great question. So the working capital product, it's one offer at a time, right? So you can't just, we have a 1 month offer, a 3 month offer, and a 6 month offer. So let's say you have a 3 month offer for an example, and after 2 months you wanted to add additional funding. Unfortunately, you would not be able to do that. You would have to wait until that 3 month settlement is completely settled. And then you can receive additional funding. And with every next offer, the goal is to increase the funds for every offer. So that would be the answer to that.
Okay, thank you. Next one. I have stores in different regions. In what currencies can I get a capital advance?
Okay, yeah, so great. Another great question. As I just mentioned, we serve as Amazon stores not just in the US but all over the world. That's Payoneer's bread and butter, if you will. It's just being global. And so for our working capital product, it can be utilized for all the following stores of all these currencies, that being the United States dollar, the Canadian dollar, the British pound, the euro, the Arab Emirates dollar, the Australian dollar, the Chinese dollar, Hong Kong dollar, the Japanese yen, Mexican peso, and Singapore. So if you have a store within any of those currencies, we would be able to provide you a working capital solution.
Amazing. Okay, thank you so much for that. Okay, next question is, do you have financing solutions with reasonable rates for businesses that grew from 100K gross to over 1 million gross in just a few months?
Yeah, so the goal is, like I mentioned, with every offer that you take with us, what I like to say is you get more funding and more flexibility, right? So the way the product works is we have a live feed of your last 6 months worth of disbursement volume. Now this is the net income that comes in from your store. And that's how we base our offer, right? We base it off, your sales numbers, those disbursement numbers, and also the health metrics of your store, making sure that you have no high cancellation rates. So the goal is, let's say your first offer is for 100K and it's a 3-month offer. The 3-month offer is worth up to 100% of your monthly average disbursements. So if your monthly average disbursements are about 100K, you should receive a 100K offer. Now, when you get this 100K offer, the goal is to increase that, let's say, by 20% to 120K in the next offer, right? And so on and so forth. And then we tailor our terms, and we tailor our collection percentages, and we tailor our fees dependent on your store's performance, dependent on the length of the term, right? So the 3-month term would be a little bit different than our 6-month term as far as the flat fee goes and the collection rate. And in some instances, we do a pretty good job of trying to tailor a solution to your store's performance. So in some cases, we have clients who are going to settle the offer way before 6 months. And because of that, we have to, reduce the collection rate, which we can do automatically, or adjust the flat fee so that we're still putting more money in your pocket so you can actually utilize those funds.
Okay, well, thank you so much for that detailed answer. I hope that that's an answer for many of our sellers. A different one. Okay, do you believe in taking loans when you may not have the need right now, but if something arises, you have capital ready for any situation?
Yeah, that's a great question. So we do have a lot of sellers, and you guys all know e-commerce market is very volatile, right? It could be, you could have a month of crazy growth in sales, and then you can have another month of slow sales, and we understand that. So the way I like to put it is, there are some sellers that, I have sellers that only sell like Halloween candy. And so sometimes in February or March, they're not going to need capital. But, if they, what I would like to do is if you don't need capital in a time where you're having a very slow sales period, it's always good to keep that financial relationship with us. We're giving you this working capital to try and expand and grow. So maybe you want to, expand your products outside of just Halloween candy. Maybe you want to do Easter candy and Valentine's Day treats and whatnot, and flowers. So we encourage that, and we give incentives for you to want to take the offer, like fee rebates, and doing like we're doing the 30% off fee rebate. We know it might not be ideal time for you to borrow funds, but we try to make it worth your while and try and continue your growth, and continue the financial relationship. That's so it's not just like a one time per year thing.
I think, and just adding on that, I entirely agree. I think what we've seen as well from sellers is it's not one solution fits all. It's having the ability to have sometimes cards, sometimes access to capital advance, It's having the access to this stuff to be able to pull the different levers at the right time to really take advantage or respond to something in the market. I mean, just look at COVID. No one could have predicted that. We had a huge amount of our sellers like pulling in loans, pulling in capital advance products to take advantage of opportunity that they suddenly found. It wasn't that the wheels were falling off and they couldn't pay their bills. It was actually a really exciting time, and we saw a lot of growth across our customer base.
Yeah, thank you for addressing that and highlighting that. Okay, next question is a short but simple one, but being efficient. What about the daily cash advance?
Daily cash advance. So I don't believe Payoneer does a daily cash advance. As I mentioned, it's a 1, 3, or 6 month product. So any type of daily cash advances, I don't believe we service. I don't know if Roland, if you've heard anything different, but I believe it's just our 1, 3, and 6 month products.
Okay, thank you for clarifying that.
Of course.
Do you have capital advance for a business which is more in the startup phase but does have inventory?
Another good question. So we're always looking to, reach out to startups, even freelancers, people that are really trying to, start their online business. As we know, online businesses are becoming more predominant. So I would say that we at least need to see some sort of traction with your store. And by that, there are a couple eligibility barriers that we have to break down before you would become eligible for an offer. So a couple of those metrics are that you need to be selling on Amazon for at least 6 months and having 6 months of sales volume. And we need each of the last 6 months to show that you have at least $2,000 in disbursement volume per each of the last 6 months. If you were to open your Amazon store tomorrow, unfortunately, we wouldn't be able to fund you. But if you were to start it tomorrow by, hopefully the start of next year, we would be, and we would plan on growing you throughout all of 2023.
Okay, thank you for clarifying that. Actually, we have some similar questions coming in.
For sure.
I think this answers the question, but I still want to address it. Our company already invoices almost 30K, and we already have several orders ready for purchase, but the cash flow is not enough. How does it work to get the advance? What are the requirements? Can you just make sure we highlight them once more?
Absolutely, and that's a great question. So as you said, 30,000 seems to be your monthly average. If that's your cost of inventory, correct me if I'm wrong, but for example, let's say it is you are doing about $30,000, over the last 6 months. So your first offer, what it would look like, it would be a 3-month offer or a 90-day offer, and it would be worth 30K. So it would be worth 100% of your monthly average disbursements. The eligibility requirements that I mentioned in the last question, you need to be selling on Amazon for at least 6 months with at least $2,000 in disbursement volume for each of the last 6 months. So it looks like, obviously in this case, you would be, more than eligible with 30K a month. And the process of how that really works is, like I said, it's worth 100% of your monthly average disbursements. From the time that you accept the offer, there is a 7-day grace period before we actually start making collections. That way you're able to utilize the funds, before we start collecting. And the way it works is, the way you get on board is, your MWS token is basically the code for your store, for your sales volume and for your health metrics. And for how we get you on board is we would connect your Amazon store to your Payoneer account. We would confirm your eligibility, and we would be able to send you an offer right after your next disbursement. So if we were to onboard you today and your next disbursement was on Tuesday of next week, your disbursement would come in on Tuesday. We would see that come in. We would send you an offer, and you would receive that offer by Wednesday, the absolute latest. And then you're able to use those funds instantly.
Okay, thank you for that detailed explanation.
Of course.
Okay, here's someone who actually knows about the capital advance. Thank you for working with me to get the working capital. Really appreciate it. I wasn't allowed to get capital advance due to some hiccup that I had last year. How long it takes after I was denied, I can reapply again?
That's another good question. So it depends on, what type of hiccup that, we would be talking about. It could be a range of different outcomes there. So in some cases, as I mentioned, we look at the last 6 months of your performance, and that's everything from your health metrics to your sales volume. And for example, I've had a client who for 5 months in a row, was doing great, had his sales coming in, but one of those months he actually got hacked. His store got hacked and he was unable to sell for a whole month, and that did put a hiccup in his store, and it did affect what we could give that seller. It'd be harder for my risk and legal team to provide a larger offer in that case. So that's one hiccup, where we would still be able to provide you an offer, and as long as you are thoroughly explaining to us what that hiccup is, and then we would develop an offer for you that might not be as high as you were expecting, but we would still be able to work with you. As far as if it's outside the 6-month range that I was mentioning, some cases I see that we have sellers that go into default, where there's no late fees with our working capital advances, but if it takes you 9 months to settle a 6-month offer, you'll fall into what's known as default. And when you do that, it would be a lot harder for you to borrow or receive more funding from Payoneer, even if it's a year later.
Okay, yeah, there will be a lot of case-based stories. So I put the link in the chat. So if you would like to have more information, you can reach out to Payoneer and maybe find out those solutions that's tailored for your business.
Of course.
Okay. Do you provide a capital when the product is manufactured, even if it is coming to test the market?
I'm trying to figure out how to word this. So is the question asking, do we provide funding for like R&D purposes to test new products?
I think the question mentions that product is manufactured, so product is ready, but there's no sales history, and it's just coming to, I think, to test the market appetite.
Right. So our capital advances are only based off of whatever the past 6 months shows us of any of your products, right? So if you have a product that hasn't even started selling yet, then obviously we wouldn't be able to provide an offer based off of that. We're only providing it based off of what your disbursement volume is from the sales over the last 6 months. It's not based on like what kinds of products or what types of products that are coming to market.
I think it's a great example of where you could perhaps look at expansion into trialing new products, as Matt was saying just earlier, right? You're the Halloween candy seller, you've got a great business out there, you've got great revenues coming in. You can obviously take a capital advance product against that, and then look at trialing dog toys or whatever it is you want to test. We don't mind. The money's there for you to grow, and whatever that means to you is a very kind of specific use case.
Right, and for example, thank you, Roland. Just for example, not to drag the question out, but I just recently was working with a client of ours who he sells they're like liquid IV in a way. It's not liquid IV, but it's like the powder for electrolytes that you put into your water, for runners. And because of our capital advance, they were able to open up a new product, a new flavor of packet for the electrolyte packet, and their sales had increased by 24% within the first month. So again, it's not based on product, it's based on your overall store, and with that you can produce more products to bring to market.
Okay, thank you so much for clarifying that. Okay, are there any prepayment penalties?
Absolutely no penalties. No additional fees of any sorts. No late fees, no hidden fees whatsoever. Even if you have like a 3-month offer and it takes you 3 months and 2 weeks to settle, that's not going to affect your relationship with us. It won't charge you extra or anything like that. No.
Thank you. Okay, next question. Can we inject funds from outside and use to settle capital repay or supplier payment?
That I might be a little unfamiliar with. I'm not 100% sure. I'll have to get back to you on that question. I'd love to answer it though, once I get more info.
Yeah, we can exactly get back to you on that.
Yeah, I can always send an email or whatever works.
If I have a line of credit with my bank, will it be a problem to get a capital advance?
Another good question. So in most instances, yes, especially when connecting to Amazon. If you are receiving a line of credit from, let's say, a lender like Marcus or Seller's Funding, and it's connected through your Amazon store, then that we would not be able to provide an offer for you. I do think, however, you could still have Amazon funding while taking advantage of Payoneer's working capital. So I think that's the only line of credit that you can access, along with Payoneer's working capital.
Okay, thank you.
Mm-hmm.
Another interesting question. If we are using the Pay Me Now feature in Seller Central to expedite disbursements, and we onboard with Payoneer, would you be considering only that single disbursement in your offer, or also considering prior disbursements?
Good question. So the way it'll work is when you get all set up and you get onboarded, what we'll have to do is we have unique banking details that we put into your Amazon Seller Central store. We by no means change anything within your store. We're just adding our banking details so that we can receive those disbursements, right? And so once you get connected, your first disbursement will come in, and we're not going to actually touch it. We're not collecting off of it. Once we see that disbursement come in, the first one, we'll simply send you the offer. And then after that 7-day grace period, every disbursement after you accept the offer, after the grace period, is when we start collecting. So what will happen is the disbursement will be released from Amazon. It'll come into your Payoneer account. Payoneer will collect 35% of that disbursement, and then the remaining 65% will be automatically withdrawn into your personal banking details. And we will keep doing this on every disbursement until the offer is completely settled.
Okay, thank you. We have a question. It's about, I think, global selling. I am based in Japan, selling mainly in US market. Can I apply?
Absolutely. Yes, absolutely. If you have a US store, even a Japanese currency store, yes, absolutely.
Thank you. How quickly are the funds available once I accept an offer?
Good question. So it is instant. If you were to receive a offer at 2 o'clock today and you press accept at 2 o'clock, you should receive them by like 2:05. So it takes about a couple minutes, but it's basically instantly available for you in your Payoneer account.
Okay, thank you for clarifying that. How does Payoneer collect the settlement amount?
Right. So Payoneer collects it as I described in I think a couple questions previous. So we collect only based on your disbursements. We don't collect anything. We've had questions of can customers settle the offer from the funds that are available in their personal account? The answer would be no. So we only are collecting and settling the offer based on your disbursements. And it doesn't matter if it's like I said, it's very volatile in e-commerce. So it 1 week you could have a 10K offer, and the next week you can have, or a 10K disbursement, and the next week you can have a 5K disbursement, right? No matter what the size is, we're only going to still collect 35% of that disbursement every single time until the offer is completely settled.
Okay, thank you. There are some really case-specific questions about some rates. Should we address them one by one afterwards, or?
Yeah, we're happy to go into the kind of details. I think it's probably more helpful to give you guys our email addresses, or sign up through the link and then reach out to us directly, and we can explain it all. Otherwise, we'll be ending up, looking at the time now, we'll be spending ages talking about different prices and rates, which are quite case specific.
Exactly.
I'd absolutely love to help anyone, individually, one-on-one. I could totally do that.
Yes, please. There are great questions, and there are really good cases with sales background, and I'm sure if you sign up from the link I put in the chat, I will also be sending that in the follow-up email. You can have more information on the rates that are specific to your business. I think we mentioned this already, but just to highlight, is there a category, product category limitation?
That is a good question. As long as it sells on Amazon, I believe we'd still be able to, provide capital for it. I know Amazon is pretty strict with what you can and can't sell on Amazon. So as long as it's under their guidelines, then it would be, okay under ours as well.
Okay, thank you so much for answering that. I guess that's all for the questions. I'm just making sure to check once more if I missed anything. Okay, we have one more question.
Of course.
Maybe we can wrap up with this one. Is there a problem if I already have a Payoneer account, but I don't use it on Amazon yet?
No. I mean, there's so many different types of reasons to have a Payoneer account. You know, we have a payer section to our business as well, where you can send digital payments globally, cross-border. So no, I mean, it's totally fine. And, you know, when you are ready for working capital, it's a very easy process to just connect it to your Amazon store.
Okay, thank you so much. Do you work with retailers?
We only work with retailers on Amazon marketplaces. So no like physical locations or no, you know, but if you are a wholesaler on Amazon, you know, we'd absolutely fund you.
Okay, thank you so much. Does my account health matter if I have a violation?
Yeah, so a violation on your Amazon store, it could affect, you know, you receiving working capital. I mean, you could still make a Payoneer account. However, making that connection to the Payoneer account, it might not let you, depending on the violation.
Okay, thank you so much for also clarifying that. We are almost at the end. Well, thank you so much, everyone. Thank you so much, Roland and Matthew, for being with us in this session. I really enjoyed it myself. I hope our dear selling partners also found it beneficial. We would really appreciate if you could share your feedback with us by filling out the 5-question survey after the webinar. As Selling Partner App Store, we will continue to host these webinar series each month to address the key seller challenges, and they will be announced on seller news and newsletters. So thank you all, have a great rest of the day.
Take care, everyone.
Thank you so much, Shuki. Thank you, everyone.
Thank you.